Hey everybody, Art Wood Mortgage Team, your favorite mortgage guy on the planet. If you didn't know, just ask me, I will tell you. Just want to talk about reverse mortgages today. They seem to be more myths than fact. And I want to just break down, I want to educate you a little bit, and I want to just break down my viewpoint on reverse mortgages. And then we'll get the first one out of the way quickly. Does the bank take over your house after you move out, you die, or whatever? Absolutely not. However your heirs get the house or whatever happens. Now, if you have no heirs and you don't sell the house, whatever, then yes, the bank can take over your house. But assuming you have heirs, you have a will, everything else, it gets probated in their name, you move out, and they'll send a demand letter that said, okay, this is not this person's primary residence anymore. They're not living. So we need you to either refinance and pay us off, or you just need to sell and pay us off. So what that looks like is your parents may have had, if you had a reverse mortgage, let's say they owed $100,000 10 years ago, and they had $200,000 in equity or $200,000 in value. Well, now they may have $170,000 owed on the house because their equity paid the price, is paying the mortgage payments, but their house is now worth $300,000 or $350,000. So the equities kind of still remained, and it's important that that's not guaranteed, by the way, but probably the way the market's gone, but probably, and then so you would still get the equity when you sell, or you could refinance that. You want to keep it in your name, you want to keep it as a rental, you want to keep it for another kid or something, you can refinance into a traditional mortgage. So they do not just take your house. Your house is a mortgage like any other mortgage in that sense. Now, you do have to be 62 years old or older to qualify, and it's got to be your primary residence. Now, the interesting thing is in the recession, the Great Recession, they actually brought down what the available loan amounts would be based on loan to value, because they're getting crushed. The values were going, the principal balances were going up and the values were going down. So really, rule of thumb is about 50% loan to value. So your house is the $300,000. The max you're going to get or can refinance is about $150,000. Now, if you're 62 years old, probably not going to get that. You're probably going to get closer to 37 to 40% because you got longer to live and you might outlast the appreciation. Probably not again. If you're 80 years old trying to do a reverse mortgage, then yeah, you might get 50 to 60% because they figure you're not going to be around too long. So, my personal thoughts on them are they're a great tool. When during 2020 and 2021, I refinanced my mom. We looked at that house. We looked at it. It just didn't make sense. She does well. She's higher net worth, and so she wanted the lowest interest rate and what have you. It was great, but the people that typically do not like reverse mortgages are the heirs because they think they deserve that equity that their parents built, and I think that's hogwash. I did not help my mom make one mortgage payment at all, or my dad make one mortgage payment on. And if they wanted to live mortgage free for the rest of their life, that's great. But one thing about reverse mortgages, if you're choosing between a conventional and a reverse, reverses are more expensive. It is an FHA product. It means you have a funding fee. It means you have mortgage insurance. And it's most of the time it's adjustable. You can get a fixed rate, but it is expensive for a reverse mortgage. But if you're letting the equity pay your mortgage for you, it really doesn't matter. To a certain extent, because you're scratching that itch of not having a mortgage payment. So I know that's a lot to get in, I think 3 minutes, but I'm happy to help and turn your mortgage into a work of art with any reverse mortgage questions you have. Take care.